Hello friends, in the series on the income tax cases, today we will discuss the case of Shrimati SAVITRI DEVI versus Income Tax Officer. This case has been reported in 101 ITR Tribunal at page number 34. Matter has been decided by AMRITSAR ITAT and the date of the judgment is 11th November 2022. This case relates to the assessment year 2010-11. The facts of the case are like this. In this case, the notice under section 148 was issued to the assessee by alleging that the assessee has not given tax on a property transaction for which the property has been sold for an amount of 40,89,000. During the assessment proceedings, the assessee didn't cooperated in the assessment. So the cost of the asset was not available to the assessing officer. In these circumstances, the assessing officer, to the best of his knowledge and to the best of the facts of the case, whatever the cost he can calculate, he calculated the cost and accordingly do indexation on that cost of acquisition and calculated the capital gain and made the addition of the assessee under long-term capital gain. The assessee went to the CIT appeal. There were two grounds of the assessee. First was that the notice under section 148 was not within jurisdiction. It is not according to the standard operating procedure of the department. And the second ground was that while making the assessment under the capital gain, it was the point of the assessee that the assessing officer does not have any right to calculate the cost by its own. If the cost was not available to the assessing officer, then it was the point of the assessee that the assessing officer have referred the matter to the department valuation officer, have taken his report and then confronted this report with the assessee and then should have made the addition. But the CIT appeal was not convinced with the point of the assessee and accordingly CIT appeal upheld the order of the assessing officer. When this matter came to the ITAT said that according to the section 55A, which says about the reference to the valuation officer, and the second section 55 subsection 2 clause B, that is regarding the meaning of adjusted cost of improvement and cost of acquisition. If these two sections are read in a combined manner, then they give the impression that if the cost is not available or if the assessing officer is not satisfied with the cost or cost of improvement which have been given by the assessee, then he must refer the matter to the DVO. So whatever the assessment has been done in this particular case by the assessing officer by himself estimating the cost of acquisition, then he does not have the power to do so. So the ITAT reverted the matter back to the assessing officer with the direction that for calculating the cost of the asset, you have to refer the matter to the DVO and then confront the matter with the assessee. And the ITAT also held that the proper opportunity of being heard should be given to the assessee and only then the assessment order should be passed. The main conclusion of this case is that whatever the job has been assigned to the assessing officer, only that job should be done by him. He should not cross his jurisdiction. The DVO is expert in valuing the properties. So when there is a mandate in the section that the DVO will value the property for the purposes of the assessment, then this job cannot be taken by the assessing officer by its own. So in this particular case, the ITAT remanded back the matter to the assessing officer with the direction that the cost of acquisition should be calculated by the DVO. Friends, this case is very important for all those cases in which the assessing officer by himself take the cost of acquisition or the cost of improvement without referring the matter to the DVO, then this case is a good ground for those cases. At the end of this video, once again I am repeating the name of the case. The name of the case is Shrimati Savitri Devi versus Income Tax Officer, and this case has been reported in 101 ITR Tribunal, page number 34. And the date of the judgment is 11th November 2022. Thank you, friends.